I'd like to introduce my speaker. I got Brad Stewart here with me. And like I said earlier, Brad's a great guy. I've known him for a long, long time. Brad, what did you say? How long you been writing our insurance for us?
1998, 99.
I know it's been a long time. And, a lot of you guys are probably out there thinking, hey, Wayne, you talk about profit and how to make a profit and blah, blah, this. And why in the world have you been with the same person for so long? Are you shopping it? I think when we look at insurance, and I don't want to take Brad's thunder here because, number one, he can address that end of it with us. I'm sure he'd be happy to. But, he's capable of sending out that information and shopping it for us. You don't have – that's part of what he does when you're working. And correct me if I'm wrong, Brad. Or tell us that process. Tell us a little bit about yourself first, if you would, if you don't mind, Brad.
Well, I've been doing this since 1986. I started when I was like 4 years old. The key thing about insurance is cost is a big factor in it, but the proper coverage is more important than cost. And what you run into is, you can pay for cheap insurance, but then if you have a claim or something that's, and then that's when the price really doesn't matter, because if you paid for something that wasn't covering what you thought it was covering, then, you're having to come out of pocket for a piece of machinery or to pay for a general liability claim or something that you thought was covered, but it wasn't. And I'll talk more about that when Wayne mentioned earlier about fully insured. I started out on the insurance company side as an underwriter in 1986. I've been in the agency business since 1994. I've always been on the independent agency side.
What does that mean, Brad, when you say the independent agency
So you've
side?
got what's called captive agents, and captive agents are your state farms, your farm bureaus. Those agents can only write for the company that they represent. An independent agent, an agency such as myself, we've got 15 to 20 to 25 markets that we deal with on a daily basis, and then we've probably got another 1,500 markets that we can access through the surplus lines side of the business, which is I have to go through a wholesaler to be able to access those. Those aren't direct appointments with my agency, but they are direct appointments with the wholesaler that we deal with. So, shopping insurance, if you're with an agent that calls you back, responds to your text, responds to your emails, and gives you the coverage and stuff, and they do an annual review with you of your coverages, your payrolls, your equipment, your automobiles, those type of things. But at the least, any agent that you work with should do that with you every year, because and I know that you may buy a piece of equipment during the year that you forgot to add, or you may have added some employees that you didn't adjust your payroll for. And the last thing that you want to have happen at the end of your policy period is one of those old crap moments where you realize that you've added 15 employees, your payroll's up $120,000, and you get hit with a huge audit within 3 months of the end of your policy period. You weren't expecting it, and that money's not. It's not like you can extend it out over the payment plan of your policy. That money's due and payable at the time that the audit hits.
So it's not like trading a truck in too soon and they say, hey, we'll just roll it over into your new finance.
No, that's not how it works. No.
All right.
So I've been in the independent agency business since 1994. I started out with a large agency here in Kentucky as their marketing manager. Did that for 2 or 3 years and realized that I was doing the same thing that an agent was doing. The only difference was I was on a salary and wasn't getting paid for what I was actually doing. So I became an agent myself in 1996 and have been doing it ever since. I was with one agency for 15 years, and I've been with my current agency for 9 years.
I gotcha. So, and one thing you said there, you were a marketing agent, and that's part of your history I had never heard in all these years, or maybe didn't hear it when you said it. But I think it's neat. You know, on our show we talk about profit a lot, and you saw an opportunity that said, "Hey, man, I'm doing about the same thing."
Well, I was doing about the same thing. The only difference was I was doing that, plus I was doing my job too. So
So I think that's a good story to share. That, and I think it's important from an contractor's perspective. You know, like mine, and guys that are listening to us, that obviously an insurance company, because we all think it anyway, right? We all think it. Oh man, they're in it for themselves, or the agent's in it for themselves. The insurance company is in business to make money. The agent's in business to make money, the same way you're in business with your lawn and landscaping business or whatever type of business you're in to make money. I think once we get past the fact that everybody, regardless of what industry we're in, we're doing it for one reason, that's to make a profit. But what I think a good agent brings to the table, and I know what Brad brings to the table for me and has for so many years, and why we just have a working relationship, the cost is very important. And Brad's not the highest. I mean, he comes in to our place a lot of times and says, hey, man, I'm a little less than I was last time. So that having the ability to shop the insurance, I think, is a big point of what Brad's talking about.
Insurance, what you do is all about information. And if you may not even have the correct information to be able to ask the question because if you don't know, you can't ask. So, I've treated all my customers. I mean, I don't care if you pay me $50 or $50,000. I treat all my customers the same. So if you call me today and you've got a question, I won't pawn you off on somebody else. I'll call you back and answer the question, because what I find is, I can't develop a relationship and build a relationship with you if all I do is come get a check from you and leave. I've got...
I can appreciate that, because, I mean, you've been with us long enough, man. I mean, we were... I mean, I don't know. I'd have to. I'm just. This is a wag, right? It's a wild ass guess, but to your point, and I think that's very important. That regardless of how big a company is, and we're certainly not we're not the largest company in the world or even in Kentucky, but you treat me the same now as you did when we were doing $200,000 a year in gross revenue.
Yep.
I could call you, you'd answer your phone. I mean, and I think it's about a relationship. And the insurance obviously is important, and we're going to certainly talk about that. But
and just kind of add, I've had, over the many years I've been doing this, I've been amazed at the number of people that the first question they ask me when I meet with them is, if I call you, will you call me back? Because my current agent, I can't get a hold of them.
Yeah.
Which I guess it's just kind of treat others as you would want to be treated. And I mean, if I call somebody, I expect them to call me back. So why wouldn't I call you back?
Yeah. And something, too, that I found very unique, to Brad, and I'm not saying it because he's sitting here, is I think he genuinely cares. And I really do. And I'm not questioning that, saying, but I think he genuinely cares. I think he cares, because, you can call and think of your own agent. How many times do you call your agent? And maybe you got an agent like Brad, that cares. You call them, they answer, they call you back, or maybe you don't, So there's a lot of things. We're kind of getting ahead of ourselves a little bit there, but Brad always does a good job of, and he can write insurance all over the country. I mean, I think he said, Texas
has got their own policy. I can't do anything in Texas.
But other than that, he's got customers all over the country, and you think, well, okay, well, how's that happen, man? How you service in such a broad area? How do you service a broad area like that? Just the internet, or
no, it's all email and phone conversations. I mean, I've got a guy insured in California. I've got, most of the customers I've got that want to actually have a relationship from the standpoint if they want me to come see them. I've got customers in Ohio, Indiana, West Virginia, Georgia, Arkansas,
So somebody that's looking for an agent potentially, and I'm not here just to pump you up and promote you, but you've and God, just to think as a world now, we've all become work from home kind of things, other than us in our industry. But I want you guys to know that if you're not being treated properly by an agent, at least reach out to Brad and talk to him. Because again, this isn't a commercial just for him. Reach out to somebody if you're not being treated properly. But who needs insurance?
So any commercial company that, whether they do work residentially or they do work for your property management companies or anything like that, most of your lawn care companies and stuff that do like work for just your local guy that, and I say local, you're mowing his yard or you're doing his landscaping or trimming, most of those people won't ask for certificates. But what Joe Public doesn't realize is that if you get up on his roof to clean out his gutters, to get the leaves out, and you fall off his roof and you don't have workers' comp insurance, then unfortunately in the society, the legal society that we live in right now, when you fall and hit the ground and you're paralyzed from the waist down, and now your wife and children are no longer able to support them, then there's an attorney somewhere that's going to sue the homeowner's policy to collect as much money off of those as you can. So, I own a home, and anybody that does work for me, I require them to have a certificate of insurance. And I'm in the insurance business, so I'm a little bit.
You think about it a little bit more. Well, what about the guy that says, "Well, you know what? I've got a full-time job. I'm only mowing 30 yards a week." What happens in his scenario if he's got his personal truck, because he's got a full-time job? Because there's a lot of people in our industry like that are mowing on the side, and they have a wreck in that truck, and they've got 3 lawnmowers on the back and 4 weed eaters hanging on the side and blowers. What happens? Does their personal insurance cover that, or what happens?
What most people don't realize, Wayne, is that unless you've got a special endorsement on your personal automobile policy for business use, if you have the accidents that you just talked about, the insurance company will deny the claim. Now, on the other side of that is I always tell my customers it's better to insure your truck in the business name, because the commercial automobile policy will extend coverage for personal use of a business vehicle, whereas a personal automobile policy will not extend coverage for business use, even if it's incidental, especially if you have a magnetic sign or something on the side of your vehicle that says Brad's Lawn Service or something along those lines. So it's always better to have a commercial insurance policy, a business auto policy, if you're using your truck for business, than it is to have a personal automobile policy trying to use your truck for business.
How much premium difference is there? Guys thinking, well, man, I'm only mowing 30 yards a week or 20 yards a week. I don't want to do. Once I go from a personal policy to a business policy as a small operator like that?
What I find is the cost difference, and most of you that are in, I can't say, that's making an assumption. I won't do that. A lot of people that are out there, their personal automobile limits will be 100, 300, 100, or whatever the minimum state requirement is for them to have for auto liability. To go from 100, 300, 100 policy, personal automobile policy, to $1 million commercial policy, probably talking about 7-8%, 7-8 cents on the dollar.
So a person can have proper coverage for not a whole lot of money and eliminate a lot of the risk associated with driving a personal vehicle around.
Correct.
As a target.
Correct.
And when as I say as a target, just to your point earlier, we're in that. we're in that where everybody wants to sue everybody because everybody's after that ride. But
a personal automobile policy, really all they consider as business use is if you get in your truck at your house and you drive it to a job site, or you get in your truck at your house and you drive it to your business. So there's the intent of a personal automobile policy is not to pick up business use where you're driving around pulling trailers, backhoes, whatever, bobcats, mowers, whatever you're pulling.
So your best recommendation to somebody is at least have if you're going to keep a personal policy, at least check with their agent to see if they have that rider.
To see if they can add see if they can add on a business endorsement onto your policy where you can actually drive it for work. Yes.
I got you. All right. Because I know that's a big thing. People don't think they need it, and there's a lot of different insurances out there, right? I mean, and I'm going off the top of my head with this kind of, but we got like with us, we got our general liability policy, we got an auto policy, umbrella policies. If you don't mind addressing, what's the difference between those, and do I need to have all those?
Okay. So general liability is a third-party coverage that will cover bodily injury or property damage that you do to a third party. So let's say you're mowing and you throw a rock out through somebody's plate glass window in the front of their house. That's a general liability claim. You throw a rock out that hits somebody and they have to go to the hospital or whatever. That's a general liability claim. So first-party coverages are your property coverages, which are, your buildings. Then you've got your buildings, your personal property, that type of stuff. Then you've got inland marine coverage, which would cover your equipment, your trailers, your backpack blowers, your weed eaters, all of your scheduled and unscheduled equipment. You've got general liability, which I just addressed. You've got automobile liability, which has a third party and a first party coverage in it, because the third party is if you hit someone and do damage to their property. So you've got third party liability on the auto liability side of it. You've got first party coverage, which is actual damage to your vehicle under comprehensive, which is any type of weather related claim or collision with a bird or animal, which would be a deer. If you live in Kentucky, you definitely know what hitting a deer is. Then you've got your collision coverage, which is colliding with another object, another vehicle, anything other than a bird or animal. And
so when you're writing a business policy for something like that, then can you exclude? I know, like some personal policies, there, what is it, like full coverage versus just liability?
You can buy on the automobile liability side. I mean, you can purchase automobile. You don't have to buy the comp and collision unless you choose to. Most of the time I'll make if you've got trucks that are paid for that are older trucks, I usually make the recommendation to my customers, to buy the liability, keep the comprehensive, because comprehensive is a very inexpensive coverage. And then, it'll cover you if you hit that deer, but it'll also cover if somebody steals your truck, it burns up, hail damage, tornado, wind, vandalism, all that type of stuff.
All kinds of risk.
Right. But I mean, if it's paid for and it's 10, 12 years old, collision part of it, they're going to adjust it off the actual cash value, and there's no way around that on a vehicle. So
I got you.
I mean, if you want to keep paying $300 or $400 a year for collision coverage on a truck that's only worth $2,000, it
might not make sense.
Doesn't make a lot of sense to me.
I hear you. So that's where it's important then for an agent to know what somebody does, what they have, and not just get a quote by email from somebody and not know what types of coverages you got. What's your opinion on umbrella policies? Are they, is it something people should consider or should not consider? Is it an advantage to utilize or for everybody or some? What's your 2 cents worth on that?
Okay, Wayne. So most of your smaller contractors don't have umbrella coverage. And when I'm talking about umbrella coverage, I'm talking it. Most people, I can talk to you in insurance terms, but most people don't understand that. So what?
I'm the first one.
Well,
I appreciate that.
When you talk about umbrellas, people are like, well, what the heck is an umbrella?
The jargon, yeah.
So an umbrella is basically excess coverage that sits over top of your general liability your automobile liability, and your employer's liability on your workers' comp. All right? And umbrella coverage, and I'll go back to my days of being an insurance underwriter. Most agents that I dealt with at that time did not ask for umbrellas. And, you know, and I would always include an umbrella in the quote that I sent them. And here's the reason why. So in today's society, getting back to the litigious side of what we're talking about now, you know, $1 million doesn't go near as far as it used to. And especially if you have, because what you've got most of you that do commercial work probably have $1 million occurrence, $2 million aggregate on your general liability. So you can have any one claim up to $1 million, and you can have any number of claims during the policy period not to exceed $2 million, your general aggregate. So what an umbrella does is it provides limits over and above that for your general liability, and it also provides limits over and above that for your automobile liability. So let's say you're pulling a trailer, got 3 mowers on it, you're driving an F-450, and you hit a school bus. Well,
are you fully insured?
Yeah, are you fully insured? Because $1 million, no, because what the insurance company's going to do is they're going to look at the situation and they're going to write a check for $1 million and then they're done, because their responsibility to you is for that $1 million. If you've got an umbrella coverage, you know, and you can buy umbrella limits starting at $1 million all the way up to as far as you want to buy it. Most of the commercial customers I have, I'll price them a $1 through $5 million umbrella. The first $1 million umbrella is the most expensive layer. The second million is, and then after this, about the second, then it goes to a minimum premium of somewhere between $300 and $500 a million.
Now, do you find it's better off for somebody, you know, like Wayne's Lawn Service, for an example, okay, or anybody, to get in other words, at what point do you decide, hey, $1 million, $2 million, and then buy an umbrella, or $3 million, $5 million, and buy an umbrella? At what point do you decide where the umbrella comes into play? It makes sense for somebody.
Most insurance companies will not write on their underline. Will not write more. Most of them will write $1.2 million. There are companies out there that'll go $1.3 million. Some will go $2 million occurrence, $4 million aggregate. But in the underlying,
now what's aggregate mean?
All right, so you can only have. That's the total amount of claims that you can have during the policy period. So you can have one claim, like let's just use $1 million, $1 million, $2 million, for example. You can't have any one claim that exceeds $1 million, and you can't have any number of claims during the policy period that exceeds $2 million. So then
I got you.
So then you hit your aggregate.
Okay.
All right.
All right.
So the umbrella policy, what it basically does, simplistic. You get $1 million umbrella, then that increases your occurrence limit to $2 million, and it increases your aggregate limit to $3 million. It increases your automobile liability limit from $1 million to $2 million, and then your employer's liability. So most people, you know, if you're in a monopolistic state, you know, I don't have enough dealings with monopolistic states to know how their employer's liability works. But in the state of Kentucky, if you put a worker in an unsafe working condition and you were aware of the unsafe working condition before sending him in there, and it's not something that's normal to your business, then that opens up employers' liability where they can come. It's not just a work comp issue.
I understand.
Anymore. They can come back and sue you because you put them in an unsafe working environment.
I got you. All
so
right.
the umbrella would sit over top of that as well.
Okay. When's the best time to schedule or not schedule equipment on a policy? You know, whether you put it on that inland marine policy or not, because I know you educated me on that several years ago.
Okay, so
sometimes we think we don't want to schedule something,
and this is just what I do, and and everybody's got their own opinion, but what I do is anything that exceeds $2,500, we schedule, because the rate for scheduled equipment is cheaper than it is for unscheduled equipment. So anything over, anything under $2,500, if you don't, because a lot of you, and there are some, and if you want to schedule it all, you can. But a lot of people, they're switching weed eaters, blowers, and stuff out on a consistent basis, and you don't want to have to call your insurance agent every time you buy a new blower or a new weed eater or whatever. So what I'll do is we'll do a maximum of 2,500 any one item up to whatever limit that you may have. So it's usually 2,500 any one item on an unscheduled basis up to 25,000, could be 50,000, could be 100,000, depending on how much equipment you have. But it's cheaper to schedule it, but with the cheaper also comes the responsibility on your end to call your agent and schedule that piece of equipment.
I got you. All right. Now, if I've got it scheduled versus unscheduled, what does that actually mean to me? If I have a loss, is it better to have it scheduled? In other words, let's say my building here catches on fire tonight, okay, and everything burns up. If I don't have it, my unscheduled part is, if I'm, help me out here, but my unscheduled part, I'll say, hey, I've got 25,000 or 50,000, or I come up with a dollar volume of unscheduled equipment, correct?
Correct.
All right. So, so if I happen to, a lot of us ego buy in this industry. You know, I'm sure there's a lot of guys that are underinsured, not because of their own fault maybe, but just because maybe, I'm not saying somebody's got a bad agent, but maybe the agent was trying to keep the premium low. Hey, you know, you walk on the door, hey, can you beat my price kind of thing, you know.
Nobody in my industry would ever do that, Wayne. Yeah, it's just, you know, if you've got it scheduled and something happens to your equipment, I mean, and it doesn't matter if, and when we're talking, just so everyone understands what we're talking about, inland marine coverage is a floater coverage. It means it covers that unscheduled or scheduled equipment wherever it's at. If it's at a job site, if it's at your house, if it's wherever, in a warehouse, you know, if it's inside your building, you know. So when we're talking about inland marine, now scheduled property is totally different. That's something that property coverage itself is something totally separate, because if it's property coverage, then for it to be covered, it has to be within 1,000 feet of the premises. All right. Okay. So, but inland marine coverage takes that away, and the floater part of it means that piece of equipment can be anywhere and still be covered.
I got you. All right.
So getting back to your question, if it's a total loss at your site and the building burns completely down, then the insurance company is going to write you whatever your limit was for the coverage. If it was 50,000, then that's what they're going to adjust off of.
I got
you.
And
then each piece of scheduled equipment.
Now that brings me to another point. If it's scheduled or unscheduled, would it? And we're running. I need a quick answer. Okay.
Yep.
All right, but it's important. If you do have a loss like that, does it matter if it's on a replacement cost value policy, or what's the other, the actual cash?
Actual cash value, ACV.
Yeah.
Replacement cost just means that they'll replace it with like, kind, and quality. It doesn't mean that if you bought if you've got a 1995 weed eater that you've been using, they can replace that 1995 weed eater. They can't, but it means they can buy something of like, kind, and quality to replace that weed eater with. Actual cash value means they would take what a weed eater day cost and depreciate it back to 1995. So
I got you.
You're probably talking about.
Now, how much difference is there? Is in your mind? Is it better for somebody to work on an actual cash value on their equipment, or a replacement cost?
Or
does it depend?
It would be dependent upon the age of your stuff.
Okay.
I mean, if you've got all new stuff, you definitely want replacement cost.
Okay.
If you've got a bunch of old stuff, then they can't replace it with like, kind, and quality anyway. So, you know, it's kind of now. Replacement cost, it doesn't cost any more to have replacement costs on your policy than it does ACV. Okay. It's not like, you know, some companies won't do replacement costs. Some companies will, some companies won't. But if you can get replacement costs, it's always better to have replacement costs on your deal, even on your older stuff, because, you know, you'll have to deal with the adjuster if something happens, but he's at least going to adjust you back to like, kind, and quality. Even if he can't get something, it's still going to be a higher dollar value to you than it would be if it was on ACV.
I got you. You mentioned doing gutters a minute ago.
Yep.
Okay. If I have a general liability policy and they've insured me as a lawn service, am I insured to climb on a roof?
As long
Or should I have coverage for, or does my insurance agent need to know that, hey, I do gutters, or at what point does
from a workers' comp standpoint, your insurance agent would even know if you're doing gutters, because one of the questions on the workers' comp is, are you doing work above 15 feet? All right, your normal lawn care, landscape, garden guy's not working above 15 feet. One thing I will, just to add on to what, if you've got a lawn care code on your policy, or you've got landscape services on your policy. So the landscape services piece of it would cover your paving stones and that type of stuff. And then the lawn care service is basically your mowing, blowing leaves, that type of stuff. So there's a distinction between the two, and one code is more expensive than the other, especially on the workers' comp side. So if you can get them to classify your guys that are actually doing lawn mowing and stuff like that in the proper code, as opposed to if they're lumping it all into one code, it's costing you some additional money that you shouldn't be paying. And right.
I'm actually got a complete show coming up on that, on classifications.
Yep.
On how we were misclassified for a long time, and the thousands of dollars that it cost us. So, but yeah, because that's an expensive learning curve.
Yeah, it is.
It's a very expensive learning curve.
That's the first thing I do when I sit down with all my is I ask them for a copy of their current insurance, and they're like, well, why do you need that? I don't care what the price is. Because my price is going to be my price, and I'm not going to cut a bunch of coverages and stuff out to match their price. But are you properly insured for what you're paying? That's the key to the whole thing.
Right. Yeah, that's right. 'Cause it's one of those things that doesn't matter till it matters.
Right. Exactly.
And that's what I talk with guys, frequently about in at seminars and talking to them consulting wise. None of it matters until it matters, and then it's like, well, I didn't realize that wasn't covered, or I didn't realize I had this, or I didn't have that.
One other point I'd like to make, Wayne, is there's a lot of people in the lawn care business insurance. You hear the term all the time, value added services. Well, any of you guys are out there that have had loss control insurance company, loss control people come to your premises, and they're making recommendations that you need to do this, you need to do that type of stuff. That's one thing that I've always done for my customers is if we have a safety inspection and they come up with a loss or a safety program or something that you need to have, then I've got safety programs that
so you can actually come on site for your insurance and do safety programs.
I do the safety programs, and we meet the requirements of the insurance company, and that in itself is a big cost savings, because if you don't comply with them, they either charge you more or they get rid of you.
Well, I know something you helped me just a year or two ago with on our snow was when we gave them our documentation of like our contracts we were using, our route sheets, and just our whole process.
Yep.
On snow.
The more information your agent provides the insurance company, the better price you get. It's that simple.